What is going on, everyone, and welcome back to the Quantum Resistant Ledger channel. Today, we have a live episode. We're going to be discussing CBDCs, that is Central Bank Digital Currencies, crypto, and we're going to end with a little bit of QRL AMA with Strike. So make sure you stick around for the whole episode. Let's dive in. Welcome back to today's episode, everyone, and welcome to the Quantum Resistant Ledger channel, the place where you come for the crypto, stay for the quantum. We have a really exciting episode today. We are going to be discussing CBDCs, which are central bank digital currencies. We're going to talk about compare and contrast it to kind of the whole crypto ethos in general, privacy. We're going to talk about the Federal Reserve. And with me for today's episode is Michael Strike, our Director of Outreach at the QRL. Strike, it's good to have you with me here today.
Hey, thanks for the intro. Looking forward to this. This is our first live episode. Hello to the community, and let's have some fun.
Awesome. Well, let's, as a starting block, what I'd like to do is I'd like to dive into kind of a definition question. I know a lot of people, whether they're watching it now live or if they're watching it later, some people know a lot about central bank digital currencies, some know a little. So let's start out with a little bit of a definition of Strike. Can you define for us what are central bank digital currencies? And with that, I know that depending on the country, countries might view it differently, whether they're in like a research phase or whether it's someone like China who's already getting close to, with actual implementation of it. Can you first define it for a few minutes? And based on that, we'll move into some further questions. Yeah,
so you're right. Depending on which country you're talking about, definitely different countries are in different stages of CBDCs. If I were to define CBDCs in the simplest explanation, it's essentially a digital version of fiat. So CBDs central bank digital currencies were inspired by blockchain, and they're both digital forms of payment. In a lot of ways, that's how they're sold when people are, talking about or they're, speaking about CBDCs. So they're both digital, but let me explain in that's probably one of the few things that they have in common, and that's kind of like where their similarities end. But we'll go through the podcast, and then it's up to everyone else to make their mind, make up their own mind. So according to there was a survey done by the Bank of International Settlements in April 2021. 56 of 65 of central banks are, at the very least, are exploring different types of central bank digital currencies. And as you pointed out, there are some, such as China, that are already doing beta tests. And if I recall correctly, I think China had a lottery to where they distributed some currency through the CBDC, and then they were monitoring, the transactions. So they're at least beta testing. They're actually leading probably most countries and probably the world right now as far as progressiveness towards CBDCs. Now, progressive doesn't always mean that they're ahead of the game. The Federal Reserve's made it quite clear for the United States that they want to take it slow and get the right implementation rather than expedite the system. But CBDCs are essentially they're basically fiat on steroids. So instead of an institutional intermediary, you deal directly with the ledger at the central bank. Now, your balance, how much money you have in your checking account or your savings account, may very well be kept at your credit union or your bank, which helps distribute the access. And it keeps the GUI the same and the interface the same in order to keep people comfortable that on the surface everything is the same, but it's much more different behind the scenes. And that the ledger is, instead of being kept at your bank, it's not stored there. It's now stored at the country's central bank, the United States. That's the Fed. So your bank or credit union, it becomes more of a router and less of a database.
Yeah, with that, I'd like to go into kind of the whole ethos and kind of the contrast between, you have CBDCs and then also just between, the whole, centralization versus decentralization. So let's dive into that a little. I'll populate the question that we had for it, which is, what is the impetus behind blockchain and the ethos or system of values compatible with central bank digital currencies? Because I think this is actually really important, because I think that moving forward, as different countries are seeing, whether they're looking at Bitcoin and saying, oh shoot, we need to kind of get on board. But if they say digital currency, they might have a very different meaning of it. So let's dive into this one a little bit, because I think this will kind of lead into a few of the parts. And then after this one, I want to talk about, some of the positive benefits of CBDCs, because I think there's a few when it comes to like inclusion, when it comes to speed, things of that nature. But let's start with this one.
Sure. So, they're both digital, right? Blockchain is digital, fiat. In fact, you don't even need fiat's already digital today. It's digital today. It's just going to be more digital in the future. But to answer your question, let's go over some of the tenets of blockchain. Okay, peer-to-peer, immutability, transparency, financial sovereignty, right? Pseudo-anonymity, right? And probably one of the most important ones is equality, as in everyone is under the same set of rules, in that it's all the same code. And it's classically secure, obviously, because there's no central database. If I were to summarize, if I were to kind of distill that a little bit more, crypto doesn't care where you went to school. It doesn't care about the color of your skin. It doesn't care how affluent your parents are. It doesn't care whether or not you drive a nice car, how good looking you are. Everyone has to follow the same set of rules. And I think that one of the things that brought the question of financial equality and everyone playing under the same set of rules to the forefront of pop culture was the whole Reddit GameStop debate. I mean, that was obviously, that's just a small picture of the macroscopic view of what the financial system looks like. But that was one of the first times it just became, blatantly obvious. There's lots of others examples, but I'd probably raise an eyebrow to anyone that argues that everyone is under the same set of rules in today's financial system. And I'm not talking about investment or the amount of capital you have. A lot of people talking about manipulation. Well, the whale jumped in and, he saw the stop losses. They're transparent. He created fear. He jumped in with a lot of capital. He manipulated it that way. I don't really see that as manipulation, because they're still following the same set of rules. I look at more as leveraging the capital you have. What I'm talking about is a set of systemic differential in the rules that everyone falls under. You might use, let's use accreditation, for example. In the United States, in order to be an accredited investor, you have to have $1 million in your bank account, or make, I think it's at least $200,000 a year. I think they just revised that. And the reason for that is is to restrict people from, it's in order to protect themselves from taking on investments that the government views as essentially too risky. So it's for protection, but at the same but it's never it's never referred to as a, from the top down. It's never talked about as a restriction. So, and this is a perfect example of different set of rules, being sold as a protection for what is supposed to be a free market. So respect to the blockchain, with central banking, in contrast, you have essentially what has evolved to be, in a lot of ways, the opposite. So you have central governments. The Federal Reserve Chairman, right, is selected by the president, not an elected official, right? Bank records, especially those transactions over 10K in the United States, you have to fill out a form if you deposit more than $10,000 into a savings account. That's not an anonymous transaction. There's no financial sovereignty, as money deposited in your bank is essentially an uncollateralized loan to the bank, backed up by an FDIC insurance policy. So, there's no financial sovereignty there. So the Federal Reserve is, for example, probably the most powerful example of several centralized governance that I can think of, in that it is the world reserve currency since 1913,
I think. Yeah,
it was created. Yeah, created in 1913.
Yeah, created in 1913, and then later.
Jekyll's Island. If I only had a time machine. So now, but at the end of the day, with everything that I'm saying now, of course, this means it's up to each person and everyone in this audience that's listening to this podcast right now, or in the future, determine for themselves if those policies are aligned with their own perception of what is in their best interest or fairness. And if I had to guess, as central banks start to roll out, they'll be sold as what governments will begin to do is sell them as the solution to the volatility of blockchain. You see this on crypto Twitter all the time. Okay, blockchain is volatile. Well, okay, yes, it is volatile, and that's one of the arguments against Bitcoin, for example. But no one ever says, "Hey, is it going to be volatile in 5 years, in 10 years?" But if you also look at the volatility, I'm going to take Bitcoin. This is 2010. Okay, this is 2000. Is it reversed? I can't tell. This is 2020. It's like this, right? But it's near parabolic. If you do the same type of curve on the value of a fiat, it's a slow trend down, obviously. So
yeah, let's talk on just a couple of these. I know we've already dove in parts of this, but what are some of the positive side effects that could come about with central bank digital currencies? Because I think some of these parts are important as well, just to bring up, because there are some.
Yeah. So of course. So in the interest of being objective, CBDCs do have the ability to overcome delays when transferring money to retailers and consumers. So blockchain has the ability to do this well. So some of these advantages that I'm talking about are going to be advantages over fiat, not necessarily blockchain. So those have to be separated out. For example, transferring money faster can be done super fast. So we'll say the Lightning Network, for example, right? So in the case of COVID-19, there was a lot of stimulus that was mailed out in paper checks in the United States, and a lot of it got lost. There were long delays. CBDCs would speed up that process. The ledger, the database is kept at the central bank. It's an Excel spreadsheet. It's an enter button. Routine runs, boom, stimulus, right? That's fast. Another advantage is reduced costs for international payments due to interoperability issues between different financial systems. If you have less protocols in the network, less intermediaries, you have less protocols to manage, and therefore less operational costs. And if you can get nations to just agree on a protocol or a system of communication, then that lowers the operating costs, and that can be a benefit. But again, that feels to me a little bit more like a benefit over fiat than it does over blockchain, because blockchain's international as well too. So CBDs in theory should help reduce the amount of intermediaries as they could, and reduce costs by talking to each other. But at the same time, that ledger or database becomes centralized. It's in one place. And with respect to the blockchain, it's very, very difficult to take over a Bitcoin network, right? I think most people would agree it's nearly impossible to garner 37 to 50%, of the hash rate. You would have to attack multiple places in the world, a lot of places in China, the United States, Switzerland, wherever. With the central bank, I think with my engineering background, I've always been a little hesitant towards central repositories. Now, that's not to say there would not be redundant systems built into a CBDC with something like that. Of course, there would. There would be offsite. There would be offsite replication. There would likely be cold storage. There would be air gap storage. There would be systems, backed up by a strong will and gunpowder, certainly. So, but at the same time, you have one governing body, and to me, that at the end of the day, feels like a systemic risk.
Yeah. Can we touch a little bit on, I'm going to populate this question here is, and this is obviously, just your take. I wanted to kind of just get your take on this. How do you think central bank digital currencies will affect the widespread use of cryptocurrencies and, the need for crypto altogether? I see it more of a central bank digital currencies can be a bit like ancillary, and, they can still have their role. I don't think it needs to like eat a piece of the pie, but what is your take on this one based on the question that we have here?
Sure. So yeah. So I mean, for the foreseeable future, right now we've got a fiat-based system. Central CBDCs are essentially in beta stage. In alpha stage around most of the world. I would say in beta stage in China. As they start to roll out, you will see a coexistence between blockchain and CBDCs, with CBDCs replacing the underlying fiat system. Now, there's going to be, in my mind, this is a bit of an experiment. There's going to be a degree of competition between these, because on one hand you have, the federal institutions that have a lot of systems and people and employment and governmental projects, things that build roads and infrastructure, all of that being tied to the fact that CBDCs must work in order for these existing processes to continue to function. On the other hand, you've got blockchain, and that poses a risk to all of that infrastructure, all of those processes that exist. So for a while, I think that you'll obviously see these two coexist. I wouldn't expect a speedy transition. And if you're happy with this, and if you're happy with the status quo, and maybe you're even a beneficiary, then maybe CBDCs are in your best interest. However, I think for the majority of us, in the long run, and years and years from now, I think that cryptocurrencies, as I've explained, don't promote systemic inequality. And I'll quote Dan Held on crypto Twitter. One of the things he said is that everyone buys Bitcoin at the price they deserve. And I think that's one of the good reasons why it's fair. And CBDCs are an evolution of a legacy system that already has a very large amount of powerful stakeholders.
Yeah, I'm gonna rewind back to the one part that you mentioned earlier, which is, and could be a conversation that we could have all together on, the U.S. regulation with accredited investors. This ties back to when it comes to whatever the standard the U.S. sets for saying, hey, you have to have this much income, this much net worth to be an accredited investor, or the way they view it. If you go back to the beginning of Bitcoin, it's the exact opposite of that, in the sense that if you were early, if you were in the early Bitcoin talk forums, if you were just an early adopter, you kind of got on early, anyone with an internet connection and ability could have got on board. And this ties to the part that you mentioned, that Bitcoin, that crypto is agnostic to who you are. They don't care about anything. It's an equal playing field. So I just thought I'd bring that one part up. But what I want to do is let's touch on one or two more questions related to CBDCs. And then I want to dive into some of the parts with the Federal Reserve, the U.S. being the world reserve currency now. Let's dive into the next one, which is, and I think this is a good question, does the decline of physical cash in societies and in turn anonymous payments call for the need for central bank digital currencies?
So that's debatable. It depends on your politics of finance. First came blockchain, right? Bitcoin, and then came COVID after that. And these two may not seem tied together up front, but there is a prevailing narrative right now that CBDCs reduce the need for physical cash. Because physical cash carries all sorts of strange things on it, possibly even COVID. But so do door handles, phones, refrigerator doors, and microwaves, right? So I'm not sure that's the best narrative, but that's the one that we hear. That's the one we see. That's what we see in the news, and that's what we see online. Moving forward, and this is just my opinion, I think that this will be used as part of the justification on the front end, but on the back end, I think there's a much more different macroscopic reasoning taking place, if that makes sense.
And that ties into the last question that I want to cover here. And this is one that obviously everyone, whenever it gets implemented for various countries, whether it's in, next year or something with like China, or if it's years down the road for other countries, will CBDCs protect the privacy of users? Because as you mentioned they have a direct portal into you. It's like that some people are just going to say, hey, well, that's the exact opposite of what I look for in crypto. So what's your take on this last one before we kind of dive into the role of the Federal Reserve and go down that lane for a little bit?
So will CBDCs protect users? I guess that depends on whether or not you work for that country's federal bank, or if you're a retail. So protect from who? This depends on how central banks create. It does depend on how central banks create their digital currency, their digital currencies. So I said earlier that one of the advantages over fiat, which is similar to blockchain, as if there can be protocol negotiation, that they speak the same language, then that will reduce operating costs, right?
Yeah.
But at the same time, what's happening inside, I'm gonna equate it to a SQL database. Most of us know what this is, or an Excel spreadsheet, even. On what's happening underneath the covers, that can be any type of system that any country wants. I don't think that the Federal Reserve is going to make the CBDC code open source. I'd probably wager that's not going to happen. It's likely that the CBDC would allow the bank to see all transactions correlated with volume, location, type of transaction, and this is fundamental, and it's unprecedented, because there's no reason a CBDC wouldn't be able to do this in real time. And now, if information, in the information age that we live in, where information is so important, imagine how important the flow of money would be, where things are going, how much you spend. It would give a lot of, it would give a lot of transparency to taxes and things like that. It could have some very positive effects on the tax code system. At least, I don't know how it is in other countries, but here in the United States, it can be a little difficult to navigate. But as opposed to blockchain, governments is still centralized, and blockchain's not. You'd call one the state's money, and on the other hand, you have crypto, which is the people's money. A negative side effect with that would be seizures and confiscations could be performed with a click of a button, which if you think about it, brings philosophical questions as to what ownership actually means. Should I be able to have financial sovereignty? If something is mine, should it just be mine, or is it actually an uncollateralized loan to someone else? That gets into philosophical, and I'm not going to take us down that tangent today.
Okay, awesome, Strike. What we're going to do now is just give you a frame of reference. Upcoming in a couple questions, we're going to dive into a QRL AMA. So kind of have in the back of your mind, if you're viewing this now, if you have a question related to what's upcoming with Enclave, a general QRL project question based on progress. If you have a question, kind of have one in the back of your head, and in a few minutes, throw your question in the chat. We'll be popping a couple up if we see some that are suitable to answer. And one other fun thing before we dive into a couple questions or parts on the Federal Reserve, a world reserve currency, I'm going to be throwing up right now Hexseed. So this is a QRL address that we created earlier today. If you want to screenshot the screen right here, I'm going to smile right now. Strike's going to smile. If you want to screenshot this, and the first person that goes to this Hexseed is going to get a little bit of free Quanta. So if you want to just take a screenshot of it now and check it out later, feel free. There'll be a little Quanta there. So I'll be taking it off the screen in 3 seconds. So make sure that you screenshot it really quickly. And what we're going to be doing now is diving into the next part, my next question for Strike, which is, what is the role of the Federal Reserve? So if someone asked me, okay, Ryan, what is the role of this Federal Reserve? The best way, or with central banks, the best way I like to explain it really simply is picture the Federal Reserve, central banks, as me standing here, any person. In one hand, you have a lever, and on that lever, you can move up and down interest rates. In the other hand, you have a money printing machine. You have the ability to create money out of thin air. So just that's kind of the visual I like to give people. But Strike, in your words, what is the role of the Federal Reserve? And this will lead to the next question, which will be the U.S. being the current world reserve currency. And we'll talk about this for a few. But what is the role of the Federal Reserve in your words?
Sure. So a lot of people do say, they call it a money printer. The system's a little bit more complicated, obviously.
Yeah, that's very simple.
We've had quantitative easing for many, many years now, where the Federal Reserve purchases mortgage-backed securities and federal treasuries. They make those purchases and essentially, and they sell debt to other countries. I heard someone ask once, what really does the Fed do? And I like the answer, to which the reply was, the Fed makes very, very, very careful statements. And the reason for that is the Fed narrative is very, very powerful in today's financial system, particularly to assets, right? So, but according to the Federal Reserve, their website, let me pull it out. Hold on a second. Okay. So the Federal Reserve was created in 1913 by Congress to provide, this is on their website, to provide the nation with a safer, more flexible, and more stable monetary and financial system. The Federal Reserve was created on December 23rd, 1913 and 1914, when President Woodrow signed into law the Federal Reserve Act. Disregard that most of Congress was on vacations, or not on vacation, but with their families during Christmas. But that's we'll skip over that part. But today, the Federal Reserve's responsibilities, according to them, fall into four general areas. They conduct the nation's monetary policy. They supervise regulating banks. They maintain the stability of the financial system. And they provide certain financial services to the U.S. government, U.S. financial institutions. This is what they say on the website. Essentially, what that means is it makes decisions when to provide and reduce liquidity, raise interest rates, lower interest rates, like you said, which affects a lot of things. It affects the M2 money supply. It affects money velocity, how fast money is changing hands, right? And this is done so in order to, according to the website, counter risks that might arise in financial markets. Now, this raises some interesting other questions. For example, should price discovery be based on, for assets and commodities, be based on words from statements? Should it be based on injections of stimulus, or should it be decided by the free market? Should asset prices be propped up by creating, trillions of dollars in mortgage-backed securities and federal treasuries? And if trillions of dollars in some of these gets injected in as a retail consumer, I no longer have the ability to see where that. I can't necessarily even see where that stimulus is going, first of all. But at the end of the day, I'm sure glad as heck to receive that, as hardworking Joe at the factory. I'm glad at the factory. I'm glad as heck to get that $1,200 stimulus check. So I'm not going to ask any questions. I'm not going to look at the gift horse. So the problem is that this contaminates the free market by destroying price discovery. With trillions in stimulus, how do I really know the value of something? And this creates a price discovery dilemma. And I'll close on all of this is my opinion. People have been debating these topics for many, many years, decades. And you'll find professional economists in Austrian economics and Keynesian economics, and you'll find professionals at differential ends of the same topic with different opinions. Both being well-educated, both intelligent people. But at the end of the day, I do want to say that these are my opinions alone.
Yeah. Let's lead into the last one, which is talking about the world reserve currency, obviously with the U.S. Having that being a strong force in the world in that regard since after World War II. What is, just to define, I know a lot of people watching this obviously know what the world reserve currency is. They know what a lot of the benefits of that are. But can you, for the 2 or 3 of you watching or watching it later that don't know what the world reserve currency is, or at least maybe the terminology of it, they don't understand the impact it has. Can you just dive into that for just a minute or two, and then we can kind of close out and move into the AMA that we're going to have, and then we'll go from there?
Yeah, so world reserve currency, it's a currency that's held in significant quantities by other nations, other countries. The intent is to be able to use this currency for international transactions. So all local fiat currencies for each country are able to be pegged to something that they all understand. So the United States has been essentially the world reserve currency since we left the Bretton Woods, gold standard went on the Bretton Woods system, 1940s, 1944. But it's also worth noting that there were world reserve currencies before this, and none of them last forever. John Keynes, the father of Keynesian economics, seemed to understand this point I'm alluding to, that these types of systems, according to history, do have a shelf life. As he's well known for being quoted as saying, "In the long run, we're all dead." And I think this is an abbreviated quote of a longer thought process. But I always interpreted that as a rebuttal against arguments that are made. I always interpreted those as a rebuttal to arguments against entirely free markets, and therefore Austrian economics. So.
Awesome. Yeah, and I think it's a great piece to read, I think, if you want to understand kind of the ups and downs of various empires over the centuries. I think it's Ray Dalio's The Changing World Orders has some really great references in it. It talks about, the rise and fall of different empires. It looks at where the U.S. and China are currently at, but that's just one resource I always, have found helpful recently. But the question where I kind of want to lead into now, I know earlier we were talking about privacy and kind of comparing and contrast with CBDCs. I want to move into a question now around our project with the QRL. And that question is, how does QRL affect or how does it protect one's digital assets? Because I think that tying back to our project, I think this is a good one to dive into. And for those viewing, if you, after this question, we're going to be diving into the AMA. So right now, if you have a question or two, throw it into our chat right now, and then we'll be popping those up. But Strike, let's dive into QRL for a little bit. How does QRL protect one's digital assets? If I have some crypto in various places in my portfolio, and I'm thinking about protecting it moving forward, where does the QRL tie into all that?
So our project has a unique niche, almost within a niche. We're a blockchain. We have our own blockchain. We're not an Ethereum ERC20. We like Bitcoin. We like Ethereum. But we have our own chain that's been running in mainnet for 2.5, almost 3 years now. But the difference is our blockchain is purpose-built to be classically secure. In other words, against factorization, and quantum secure, so that because of our signature scheme is based on NIST's recommended hash-based signature schemes for as a stateful algorithm. Because we're hash-based, hashes themselves like SHA-256 and other hash-based signatures, other hash-based protocols, those are quantum resilient or quantum secure. There is no effective way, even with a quantum computer, to be able to get a pre-image from a hash. So point being, we're classically secure, we're quantum secure, meaning we're current text secure and future text secure. So one of the things we've tried to do is, first of all, we connected the dots on blockchain years ago. Dr. Peter Waterland connected dots on blockchain. I've been in blockchain for years as well. Then we also connected the dots to quantum. And when connecting the dots to quantum, one of the advantages is that Peter was able to, in some way, see where quantum secure signatures for stateful hash-based signature schemes were headed. In this case, it's XMSS. And out of 50 or 60 submissions to NIST, XMS became one of just two NIST recommended post-quantum secure digital signature schemes. LMS being the other one, XMSS being the one that is the underlying scaffolding for our addressing scheme. So to answer your question, current text secure, future text secure.
Awesome. Thanks for answering that. I am actually just popping up. If you have questions for any questions regarding our project, just throw them in the chat. We'll see if we have any in there. I know we did this. This is our first live video that we're doing for this. So some of them, we might not have as many as we would. Let's see here. I'm just going into the chat real quick, Strike. We're going to see.
There's one on there. I see one.
Yep.
JR.
Which one do you want me to pop up?
JR asks, a lot of people will be wondering if there's any further exchanges for listing. So exchange information due to non-disclosures has to remain private within the project. But I can tell you, exchange listing and increasing the number of exchanges is a high priority for the project. Some things are within our control, some things are outside of our control, but that remains definitely a high priority. Let's see what other questions we have.
Yeah, we got one here about staking. Is this one that is when it comes to staking, what will the process be? Can we dive into anything on this one, Strike?
When is staking coming and what will the process be? Can I do it from a Raspberry Pi? More of a developer question, but I'm going to take a stab at it. So staking's coming in the next iteration of QRL as move from a proof of work consensus mechanism to proof of stake. Since proof of stake does not require the same encryption and capabilities in the processor that RandomX does, our current proof of work mechanism does, you very well might be able to run it on a Raspberry Pi. I don't think it's been tested yet, but it's possible. That's something I'd want. That's when I'd want it. That's something I would want to test for myself. And staking is coming. And as far as when it's coming the next iteration, the next fork.
Awesome. It looks like those were the few ones we had right there. And if anyone else has any last questions, feel free to throw them in there. Strike and I will stay on for about another minute or so just to see if anybody has any in here. And we'll close out. Let's see. You're welcome, Stephen. What were you saying, Strike?
There's one in here. As far as a lot of people will be wondering about the acceptance of CBDCs by the people. That's hard to say. I mean, I think that it will definitely be faster than blockchain, because blockchain started out as a slow-moving freight train, right? Yeah. But with CBDCs, this is going to be coming as a new system directly from the top, and it still remains to be seen whether or not you're even given a choice. In some countries, I can see that this would become a mandatory monetary system of payment. Now, does that mean that cash is going to disappear? I think that slowly cash will start to disappear in various countries around the world. It is an antiquated. If you look at the grand scheme of things, I believe it is an antiquated way of doing transactions and storing value. At the end of the day, the U.S. dollar is just cotton and linen. If they stop printing them, eventually, just by deterioration itself, will start to go away. And ever since 1965, even coins in the U.S. aren't made of 90% silver anymore. So I don't have any problem discarding nickel. Not a nickel, but I think it is actually nickel since 65. But
yeah.
What else do we have?
Strike, look at the last one we got. We got a one at the bottom talking about if you could elaborate or not on pros and cons of totally transparent blockchain versus anonymous like XMR. There's another one. Will eQRL be minted when you swap regular QRL for it, or will be exchanged from a type of Coinbase wallet? Do you want to dive into any of these ones, or are you? Which one you want to go with?
Yeah, so I think the first question was privacy coins versus non-privacy coins. This is a conversation we're actually having within the team on whether or not the project is going to take a turn in the direction of being privacy based. The advantage of privacy coin is that obviously transactions become are no longer transparent, and you are essentially completely financially sovereign, right? You have your privacy, and I think that privacy. Personally, I think that privacy is a fundamental human right, almost just as much as the pursuit of happiness is. I think privacy should be the same, but I also believe in the rule of law and the and order. But at the end of the day, I also believe in that code. Code is law. So these things will come to fruition in the coming years. One of the nags on privacy coins is they're much more likely to be attempt to be legislated out of existence based on their nature of being a privacy-based coin, especially if sovereign governments are not able to adapt their taxation system properly with the CBDC that they deploy, in my opinion.
Yeah, I think we should do speaking of code of law, we should probably do a whole upcoming episode on that topic in itself. I think when you just said that, I think I just thought of that in my head. So maybe we'll do one of those upcoming if that's a topic that is of interest to people. But it looks like we covered a few of those there. Any last questions regarding Enclave? Anything else specific to the project? Feel free to throw. We're probably going to answer maybe one more. We're getting to about a little over 40 minutes, so we're going to probably end the stream in a minute. But good questions in here so far. If you haven't already, make sure that if you haven't already been subscribed to the channel, make sure that while you're watching this right now, go ahead and hit that subscribe button and that little bell. That way, when we have other upcoming, whether it's live streams or whether it is episodes that we do with a guest in the industry ahead of time, make sure that you subscribe. That way you're first to know, and you'll be able to see when we come out with new episodes. So make sure you subscribe if you haven't already. I'm going to check the chat one more time at the bottom here. It looks like we have answered most of those ones coming in.
There is one in here that I can jump into. It says, will your QRL be minted when you swap regular QRL for it? Essentially, because you would be moving your QRL off-chain into a smart contract on your network encapsulated within XMSS. Yes, it would essentially mint something new, but that smart contract would then, I don't know. I'm sure our developers are going to zing me for this, but then it would become unminted and sent back to you when you do a withdrawal. So yes, so it would be minted and unminted.
Awesome. That's
as an ERC20, and also there will be also a subset of ERC20s that there are some restrictions on whether or not on the ERC20s, but we're working towards not just Ethereum itself, but ERC20s to be quantum secure in the future as well, and not necessarily as the Enclave project evolves. That doesn't even necessarily limit it just to Ethereum, as long as, based on the foreseeable future, as long as a native blockchain has smart contract capability, the potential exists based on the scope and intent of the project to be able to mint and unmint coins on other blockchains that have smart contracts. So
awesome. That was a good. Yeah, that's a good question, Archer. I think that's good. Thank you, Strike, for diving into those. And for everyone watching this live at home, I know some people are going to be seeing it now. Some people are going to be seeing it later in the day, later in the week. We appreciate you taking the time to join us, whether you're listening on your ears or you're listening and watching. We look forward to doing upcoming videos where we dive into some other topics, whether it be upcoming stuff with Enclave. And Strike, thank you. Thank you for everyone at home. And we will see you in the next episode of the Quantum Resistant Ledger channel. And until we see you in the next episode, keep those digital assets secure. If you haven't heard about the project or you want to learn more, go to theqrl.org. Explore for yourself. If you want to introduce someone, maybe just send them there. Get them introduced a little bit. It's a fun rabbit hole to start learning more about. And don't be too intimidated. There's a lot to learn. And within our community, there's a lot of people within our community that are more than happy to help onboard you. If you have any questions, you can join our Discord community. You can talk with our team. We're more than happy to help make the experience good for you. And Strike, have a great rest of the day. Everyone at home, talk soon, and we will see you in the next episode.
Bye-bye. Thank you.